Welcome, Blockhead traders. I must inform you that here at Blockhead Traders, we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer, as a reference point. We expect you to form your own financial opinions and make your own financial conclusions. Hey, Blockhead traders. Today is Sunday, July 18th, and this is Blockhead Traders Weekly. In this week's episode, we're going to do an interview with myself, Sprocket888, and Viper XL007 about different perspectives we have on trading and investing in general. But before we hop to those questions, I want to give a shout out to our Discord channel. You can find a link in the description below. Click on it, check it out. In there, you can say hello to myself, Viper XL, or some of the other traders that hang out in there throughout the day. You can ask any questions that you might be wondering. Drop us a couple of topics for shows that you would love to see us discuss or review in the show. And just say hello. Love to have you. It's where we do a lot of learning, a lot of kicking ideas around. Look forward to seeing you there. So let's go ahead and get the interview kind of kicked off here. I'll bring in fellow Blockhead trader Viper XL007. And kind of the first topic that we want to kind of discuss or at least talk about is, where did our trading journey, investing journey really start? And, so Viper, do you remember the first trade that you happened to make, or maybe the first investment, or the first time you kind of dipped your feet into the world of the stock market?
Uh, First time. I mean, I remember a season of moves. Don't remember like the first share or anything like that. It was a series of ill-advised selections. I remember buying some things that were trending at the time, and there were some investments that got some gains and whatnot. Like basically, I thought I was chart reading, but really I was just I don't know, looking at patterns on a day chart, and then I was like, oh, it's gonna do this, and it did, but it didn't do it because I had any technical analysis behind it. Um, and then I mean, in that series, very shortly, like so, in that handful of first moves I made an infamous oil purchase that kind of rivals your soy situation. So I had bought. There was an oil. Well, first of all, I had no idea what the underlying was, which is problem number one. Um, then second, I was like, it was trading at like I want to say like a dollar 30 or something like that. So I was like, I mean, how much lower can this thing go? Like it was on a downtrend. And so again, no technicals, no understanding. I was like, it's gonna go back up. And so, picked up probably 1,000 shares. I think it was in that ballpark. I think I put $1,500 somewhere around there on it. Um, and it moved up 5 cents, and I was like, oh sweet, I'm gonna make so much money on this. And then it dipped down 10 cents and 15 cents and 20 cents, and then it stopped, and I was like, oh geez, like okay, well, how much lower can this go? Like, so, and then I went to bed, and then fate had it, I guess, that was the moment that it was a mutual fund or something like that. And so they did a reverse split overnight. And I woke up in the morning, and all of a sudden I was like, holy crap, this thing's at like $29 or something like that. I was like, I just did it. I hit the jackpot. Only to find out the reverse split came in at like 33.25 or something like that. So then I was in a whole world of hurt, bailed out, and licked my wounds for quite a bit after that. So that wasn't exactly the first trade, but it was the first significant. It was in the batch of first trades and a wake up call.
Oh man, that sounds like quite the entry there into the market.
Yeah. What was your first dollar?
Yeah, so kind of like you, I don't. really remember the first trade or the first share that I ever bought. I remember being in working full time. I was kind of out of school, not for too long. Um, and I remember people talking about investing and the markets and everything. And I said, man, I really want to learn this. I really want to kind of get in on this. And um, actually, my youngest brother was in school at the time down here in Columbus at Ohio State. And it's kind of funny to hear how opposed he is to markets in general today. We can probably touch on that story in a different time. But yeah, I got with him and I said, hey, well, let's really learn how this trading thing works. And we actually signed up for Scott Trade was the broker at the time. They're no longer a thing anymore. And I remember driving out to take some classes and stuff on, what is the stock market? How do you actually read an earnings report and look at a chart and talk about all this stuff? It was some free kind of service that the broker kind of offered. And I remember, after that first class, he says, yeah, let's go get something to eat. And we went to Wendy's and I said, yeah, Wendy's, I like Wendy's. Wendy's will be a good stock. I'm going to buy some Wendy's. And I remember investing in Wendy's. I didn't really go upside down. I also didn't really make any money. It kind of just didn't go anywhere. And I didn't really know, what was going on. I'm like, wait, I thought things are supposed to go up. And so that was probably kind of my first trade. And yeah, it was kind of fun. And looking back, I was like, man, what was I thinking? I wasn't really thinking about anything. I just thought, yeah, buy some Wendy's.
Burger, fries, and a stock. I remember that era now because that was your give me dividends era. I only buy things with high dividends.
Yeah, yeah. That era I think is probably going to come back again. I think I didn't really know what I was doing back then as much. I just thought, "Oh, dividend yield is 8%, must be great." Or, I'd go find a dividend yield it's like 40%. I'm like, "Oh yeah, this is great. I'll buy this." And, you know, tr 6 months later the company's like, "Yeah, we can't really pay this much dividend. We're going to go ahead and cut the dividend out." Um, so I think that I'm hoping to get back into dividend collecting, but yeah, back then I took these kind of concepts that I first heard about, and then I'd kind of go act on them, and the resources were a lot different back then. It's amazing the amount of learning that you can get today out of just kind of YouTube videos, different people's blog posts and things like that. I don't actually recall that YouTube was really much of a thing back then. um, I remember kind of scouring different people's financial websites and kind of blog posts at the time, but it was really kind of hard. There was a lot of information back then that was really behind different paywalls and things like that. And so uh, just being able to learn things was quite a bit different than it is today.
Books.
Yeah, books are one of them. Actually, the crazy thing was back then, there was commissions. Everyone's like, What do you mean there was commissions?" And of course, back then, commissions were usually $7 to $14 a trade. And you think about that now, like that's huge. But I remember back then talking to people that I worked with and stuff, and they're like, "What? Those commissions are only $7? Are you kidding me? When I first started trading, commissions were like $50 a transaction." And I remember not having a lot of money in my brokerage account, maybe 1,500 bucks, 2,000 bucks. And so when you want to pick up a couple $100 in shares of Wendy's, you got to fork over $7 to enter and $7 to exit. So you're already kind of like 7 to 4.5 to 7% movement just to break even.
Yeah.
Um, it's kind of crazy to think about the world that now is like commissions are just zero on shares and equities.
All right. So how about this one? Someone comes to you and says, I have $1,000. I've never touched the market before. um, I mean, maybe to keep it from being super vague, what what should I buy first or do first? Kind of what are the stepping stones? I mean, we kind of did a video series on this, but just your elevator pitch to somebody looking to get going.
Yeah, I think the first thing that I'd really try to understand, I'll probably kind of go back to some of the things in that video, but I'll try not to. Um, the first thing I really
Oh,
want to,
that it could be the first thing you tell them is, "Hey, we have this YouTube channel, and you should go watch our series."
yeah, yeah. But yeah, honestly, it's going to be hard to answer this without kind of sounding like a rehash of that. But really, the first thing that want to try to do is figure out, risk tolerance, right? I would probably say give them some sort of. It's probably not going to be an elevator pitch unless this is like going to the top of, I don't know, a really big building, and it's really slow elevator.
To the
Um,
moon.
yeah, it's a space elevator. Um,
Yeah.
I'd really ask them, where's their comfort level? Like, is this $1,000? Is this something that you're counting on to maybe buy a car in a couple years or something like that to gauge risk tolerance about what type of assets to look at. Um, I think it's very important to understand what your own personal threshold is for financial risk. One of the aspects that I've come to learn over the past years trading is that trading is more of a risk management game than it is about anything else. It's really about understanding what are you comfortable with, and then go figure out what fits in that comfort zone. And so I would probably really try to gauge, their appetite for risk. And the riskier that they are, the more that I would gravitate towards guiding them to riskier investments or things that are less likely to pay out, but when they pay out, they might pay out bigger. Um, if the individual is never been in the market, they will most likely be more risk averse. And so I would say, hey, look, before you start trying to fly through this world that's the market, if you've never really been in it, you've never really felt it, you've never really seen the interaction day in and day out, I would really guide them towards general index funds, a SPY index fund or, some ETF that's tracking commodity, gold, precious metals, energy, maybe. I mean, even some of that can be a bit risky, but I'd probably get your feet wet with these index funds or these, lower risk assets, maybe bonds, even. Um, to just kind of get them some exposure to that and kind of go from there.
Yeah. Yeah, I like that. Because that's important for anybody, watching this, new to the market, deep in the market, anytime you're dealing with fresh money going into the market, earned money that you have that you want to move into the market for investments and trading. To me, that first question you should ask yourself is, uh, you know, what's my goal here, and when do I need to access this money? Because there's so many reasons. I mean, it could be a supplemental retirement thing that you're working on. It could be, like you mentioned, that there's a big purchase coming up soon, and I just want to grow it a little bit more before we get there. And so now we're on a shorter time frame. So that's a very important question that I also find myself asking myself periodically, every few weeks or so of, where do I need to shift my focus? Do I need to touch any of this money for anything at any time? And then that guides where I go with how long term do I go in? versus trying to do a quick spin or all that kind of stuff. So, um, which I don't think is really something we fully covered in that video series. So, kudos on avoiding that.
Yeah,
I mean,
actually,
we'd certainly talked about it a little bit, but not to that degree.
yeah, the access to money, that's actually a great addition there. And certainly a great question to have with yourself or this guy in the elevator that's got $1,000. Um, because for me, one of the recent things that I did was kind of spin up an IRA account in addition to my 401k. In tandem to that, I have an HSA, a health savings account, and I did similar allocations within each as far as different percentages and certain large caps, mid caps, foreign emerging markets, foreign markets, things like that. But one key distinction I did between the IRA and the HSA was in the HSA, right? This is money that I might need for healthcare, things like that, that I can go ahead and invest and grow interest free, tax free. IRA, same thing, but the time horizons are super different, right? In my IRA, I'm probably not touching this thing for another 20, 25 years or so. In the HSA, I might need to make a withdrawal next month,
Hmm.
depending on what happens in the medical world. And
Yeah.
so when I make my investments in the IRA, I'm looking much more into kind of mutual funds, more of those longer term investments that you kind of lock into them that have like early withdrawal penalties and things if you pull money out within the first 180 days or something like that. And in the HSA, I'm in a lot more of ETFs where you don't have any fees to enter. Mutual funds have kind of maintenance fees. They might have loading fees, things like that associated with them. Whereas a lot of ETFs, you can get similar asset compositions, um, but you can also kind of cash in and out with no penalty. Um, and there's no commissions and things like that. So, that makes sense because tomorrow I might need that money. So, that's a great point.
Yeah.
So, yeah, I think there's quite a bit to gain from this type of format. We actually have a lot more questions that we didn't even cover today. We'll sprinkle them in the future as we kind of go through the different episodes and things like that. And glad you could hang out with us here this evening on this Sunday night. And looking forward to having you drop us a line in the Discord, link in the description below. And good luck this week. Have a lot of fun. And remember, think outside the block.